Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to do something a little bit different today. I'm going to give you a sort of top tip on how to stay on the right side of the market the majority of the time. Now, what I'm looking at here is just the Euro US dollar chart on the 4-hour time frame, and it's really important to keep in line with our 4-hour time frame trend. This is a nice medium term sort of trend that will allow you to stay on the right side of the market the majority of the time. It's not 100%, nothing is 100%, but it's a good little tip to keep in mind. So I'll start over here on the left hand side here, and what we can do ultimately is point out key support and resistance levels which will help us identify where the trend may be at an end. So if we go to the weekly time frame, and we just point out a couple of areas of support and resistance that we saw recently. So a good area that we watched for was when the market broke out of the 12,400 area. We looked at the market heading up towards this level of resistance here, which was the high in around about 24th of June 2019. So what we said then was, if the market came into that point, we'd look for the market to either close above or close below and see how the market reacted at that point. But what we do know is, when the market does get there, is that we no longer want to be buying that market anymore, because we're waiting for the market to break out. Now what we saw was, the market actually broke through, closed back below, and then it didn't actually close above there again. So what we saw was the market was in an uptrend, okay? It was forming those nice higher highs, higher lows, okay? Again, higher high, higher low, higher high, higher low, higher high, higher low. And then here is obviously where our area where we could anticipate whether the market continues that trend or breaks to the downside. And what we saw was the market actually broke through this low just in here, and then this low was our most important one. So that's the previous structure low. So what we saw was the market then drove back in, rallied up, broke through, formed a lower low. And now watch now, the market is now just keeping in line with that 4-hour trend. There is nowhere where the market breaks out of that 4-hour trend. So I'll mark up those key areas and those key support points. So if I remove all the drawings there, we can see the market rallies here. This is our key support resistance point here. Look what happens. We break above, close back within. That's an actual really good fake out pattern that you can use in the market. Market drops lower, takes out previous structure lows. We then look again, look for that trend to continue. Market comes up, breaks through, where we've got another lower low. So we're just continuing to follow that downtrend. Now what we've got here is the market is now consolidating. So we've seen the market pull back into these previous 4-hour lows and form a high up in here. So this is the next high that we've got to keep in mind. If the market breaks and closes above this high in here, then we have the opportunity to potentially look for a reversal in the market. Now we did a video over the weekend of looking for the potential for the dollar to reverse short term, and what we said was you need to wait for that 4-hour trend to change. If it doesn't change, then we're going to continue to buy the US dollar. And what we can see here currently is that we've rallied back up into this previous structure high, and it started to act as resistance. So what we could see here is the market now move back down. Where's it going to move back to? Potentially these lows in here, where the market could find some kind of support. If it finds support, then the market will likely rally back up into these highs, or we assume that the trend could continue and the market will move to the downside. So just a top tip for you today is try and keep on side with that 4-hour trend. Follow those highs and lows. A good example again is looking at the Australian US dollar, and we can see here I'm actually looking for a potential short opportunity because the market rallies, okay, puts in this high here, we come back down, we rally up, we fake out of that high, we've come back in, and now we're potentially forming a lower high. So I'm going to go down into the 15-minute time frame, and you can see the market has changed trend. The market has rallied, formed a potential double top pattern, and broken to the downside in here. So what we could actually look for is a short position around now, place our stop losses above those highs, and you can look for targets down back at those 4-hour lows. So if I go into the 4-hour time frame, just in here, and then look for the market to trade back down to these low points in there, because what this is saying to me is that the 4-hour trend is not over, and we could see a continuation back down to that area of support. Okay, so try and use this tip, keep on the side of the 4-hour market. Obviously it's not 100%, you know, because the trend is going to change at some point, but just keep in mind just looking at this 4-hour trend. I hope you enjoyed this video update. I hope you were able to take some kind of information away from it. If you did enjoy these type of videos, then please like and subscribe to the YouTube channel for more trading content, and I will catch you tomorrow. Cheers.